Office of the Auditor General Performance Report for 2019. My report for the audit year 2019 presents the audit results for the financial year 2018-19 and the OAG Annual Performance Report for 2019. The audits undertaken include financial audits, IT audits, value for money audits, engineering audits, forensic investigations, and many more. The accounts of the Office of the Auditor General were also audited for the two remaining financial years, 2017-18 and 2018-19, by an auditor appointed by Parliament. I am grateful to you, Right Honourable Speaker, and the entire Parliament, and particularly the Clerk to Parliament, whom we work closely with, and finally bring the audit of the Office up to date. The reports were submitted to your Office, and the audited accounts and opinions thereon have been included as part of the OAG Annual Performance Reports. In delivering the mandate with the resources provided, I concluded a total of 4,496 audits during the year ended 31st December 2019, which included 4,211 financial audits, comprising of 108 ministries, departments, and agencies, 114 commissions, statutory authorities, and state enterprises, 97 projects, 4 product sharing agreements, and 3,888 local governments and tertiary institutions. I've also included 11 value for money audit reports, 36 forensic investigations and special audits, 5 IT audits, 7 specialized engineering audits, and 228 projects. Due to adjustment in reporting timelines brought about by the Public Financial Management Act of 2015, from March to December following the end of the financial year, I dedicated much of my audit effort to all ministries, departments and agencies, higher local governments, district and municipalities, VFM and engineering audits, IT audits, major donor finance projects, and forensic investigations. The lower local governments, that is sub-counties and town councils, schools, and those audits in progress will be audited and concluded by June 2020. The ever-increasing scope and range of audit continues to pose a challenge to the Office without a matching increase in the audit resources. This audit year, in addition to the audit of financial statements, I continue to focus on the thematic approach of cross-cutting areas in government and, in one way or another, impact on service delivery. This year, major thematic areas are budget implementation by government entities, 2, compensations of project-affected persons and acquisitions of right-of-way, 3, management of the National Backbone Project, 4, staff performance management. We strive to harness synergies from all types of audits to enable us meet varying stakeholders' needs. The brief highlights of my findings, the details of which are in my report to Parliament for the year ended 30th of June 2019. 1. Budget performance. 1.1. Performance of the budget at national level. For the year 2018-19, government approved budget of 32 trillion for the financial year, which was later revised to 35 trillion through supplementary allocations. I undertook a review of the performance / implementation of the 18-19 approved budgets as an area of study during the current audit year. Government revenue and expenditure. Out of the planned revenue of Uganda shillings 7.62 trillion from taxes, NTR, grants, Uganda shillings 17.86 was collected. Government expected to fund the balance of shillings 17.4 trillion through domestic borrowings, budget support, external financing, appropriations in aid, and domestic debt refinancing. Out of a total of 35.03 trillion, 31.19 trillion, that is 89.03%, was released, leaving a balance of 3.84 trillion. Out of the total release of 31.19 trillion, Uganda shillings 30.64 trillion was spent, leaving unspent balance of shillings 548 billion, an absorption rate of 98.2%. 2. Unapproved supplementary expenditure. During the year under review, the Minister approved a supplementary budget of shillings 772 trillion, but upon tabling the expenditure to Parliament, only Uganda shillings 615.75 billion was approved, leaving 1.56 trillion unapproved and therefore spent irregularly. Garnishee of government funds. Garnishee orders against government resulted in 66,555 billion and US dollars 528,000 being attached from government bank accounts. I observed that judgment debtors are increasing, resorting to the use of these orders against the government accounts as a means of encroachment, partly due to the absence of a clear and proper procedure and policy for the effective settlement of court decisions and orders entered into against the government of Uganda. The effect is that planned government programs are not implemented. 2. Management of the Uganda Petroleum Fund. Withdrawals from the fund, which serves as a depository for all revenues accruing to government from petroleum-related operations, are made by appropriations to either the Uganda Consolidated Fund, that is the UCF, or to the Petroleum Revenue Investment Reserve, the PRIR. The transfers to the Consolidated Fund are supposed to support the national budget on infrastructure development, while those to the PRIR are for future investment. Absence of a financial rule in the management of the Petroleum Fund. The process of appropriation and eventual transfer of petroleum funds to either the Uganda Consolidated Fund or the PRIR is not guided by any fiscal rule, but left to the discretion of the Ministry of Finance, Planning and Economic Development during the budget formulation process and Parliament during appropriation. The lack of a fiscal rule can lead to undesirable spending and investment decisions by government that may not be economical. 2. Lack of an approved petroleum investment framework. Although government appointed the Investment Advisory Committee, IAC, there was no approved petroleum revenue investment policy and investment framework developed to guide on the operations of the Petroleum Revenue Investment Reserve by Bank of Uganda. Lack of an approved PRIP delays appropriation of petroleum funds for investment and their subsequent investments to grow the fund without an operational management agreement. The funds will continue to remain unutilized on the Petroleum Fund account without maximizing any returns that could have been obtained if funds were invested without causing undue risk to the PRIR. Drawdown of funds from the Petroleum Fund. There was no explicit disclosure of the infrastructure and development projects that were to be funded from the petroleum revenues of Uganda shillings 200 billion transferred from the Petroleum Fund to the Consolidated Fund as part of domestic financing for the financial year budget 2018-19. I therefore could not confirm whether the amount was used to finance infrastructure development of government. 3. Roadmap to 2021 general election. I observed